Number 2, this is the fiscal year 2016 financial audit, and Mr. Houston is going to lead us off.
Thank you, Mayor. Doug Reedemels here from our auditing firm to present the audit to you, and then he'd be happy to answer any of your questions. So he's got a little presentation on the screen here.
I'll stay over to the side here while we're doing that. Well, first, before I look at the slides, if you look in your audited financial statements in the book, we come out and look at all kinds of numbers and do a lot of test work just to form an opinion on your financial statements. And on the bottom of page 1 is the opinion that we formed, and it says the financial statements of the city are fairly presented in all material respects. So that's a good, clean opinion, certainly what you hope for when you have an audit, and generally what we are fortunate enough to be able to issue. And then if you don't look at any of the numbers in here, flip to page 3, and this is a management discussion and analysis, and that the right at the top there under financial highlights, those are the big things that happened in the city for the year. So if you don't want to look at all the numbers, look at those couple of points there. Now I'll run you through a couple slides, explain a few things, and then I've got a few more pages in the book that I'll have you flip to. I'll lose track of my notes, or I'll start talking about a different city. Okay. So these first couple of slides are on the overall city, just the governmental activities, and that encompasses all the operations of the city with the exception of water and sewer and fiduciary type activities. So it's your general fund, the street funds, all of it on a full accrual basis. And what this slide is intended to show is the expenses of each functional area along with the direct revenues for each area. And what you can gain from this is where does our tax dollars get spent. And you can see a lot of it's on general government, a lot of it's on public safety. Public Works looks like they're in great shape, right? But the revenues are actually higher than the expenses, but that's because in the full accrual basis, when streets get constructed, they get capitalized, so they aren't included in the expense. So that's why that looks that way. And then sanitation, culture, and rec, and that kind of thing you can see as well. And then this is just a breakdown of the revenues, again, of all those functions. Where does the revenue come from? 49% is coming from your property taxes. By comparison, last year was 50%, and all the others pieces of the pie fall into place pretty much where they were last year. And now the next several slides are just strictly on the general fund, the operating fund of the city. The general fund revenues, strictly just the general fund again, and how they are broken down. So property taxes, you can see, took a jump this year. Part of that is just the increase in values, taxable values of the property. And another big chunk of that is the receipt of some stabilization money from the state this year. And that's because the state eliminated the property tax on personal property. So they reimbursed the city for that loss. So that caused a jump this year with getting those claims filed and received. Charges are down a little bit in the general fund, and that's strictly from the general fund didn't charge other funds quite as much, so that to preserve fund balance in some of the other funds. Then the expenditures on those same areas, all pretty steady year to year. General government is down a little bit because in 2015 an additional $500,000 was put into the pension plan out of the general fund. This year only $250,000 was taken from the general government, rather not general fund, but the general government section. So that's why the expenditures are down a little bit in the general government. Then this is the ending fund balance in the general fund. At the end of the year, it's running right at 18%, almost identical to what it was last year. A little bit lower than our usual rule of thumb to keep it around 20 to 25%, but still in good shape. And then this one slide is to show the water and sewer fund. You can see the revenues, expenses. I did this one sideways just to make it look a little different. But you can see year after year, operationally, it's running almost break even, just a teeny bit of a loss. However, the operating expenses does include depreciation, which is a non-cash expense, but that's about 1.2 million a year. And not included in the revenues are the non-operating revenues, such as interest income and capital grant money, if any is received. So cash-wise, the fund is still in really good shape. But just this, when you look at it this way, you can see the operations are just cutting it right close. And this, I should show you this one at the very end, but this is a comparison of how does Norton Shores General Fund look with other cities. These are just cities that we audit. They're organized from the largest budget to the smallest budget, and you can see Norton Shores is right around. This has a little different numbers in it, just to make it more comparable between cities. So it looks a little bit lower than the number I just gave you. It's about 16%. And other cities similar size. City number 1 there, just for your information, is Kentwood. So you're running just a little bit less than them. That's the biggest one we do. So just for information, to kind of know where you stand. Okay, now we'll get back into the book. So continuing with the general fund on page 41. Who doesn't want a page for an audit report, right? So on page 41, this is the budget to actual for the general fund, and you can see right down near the bottom, you can see the net change in fund balance. It was budgeted to be a negative 222,000. Finished the year at a positive 6, so 228,000 ahead of budget. That's very good. And then a couple of other funds, just flipping through, like you have the several different street funds. They're reported in different places, but on page 42 is the major street fund. You use some of that on construction activities this year. Fund balance at the end of the year in that fund was still 387,000. And then way up on page 50 are local street and municipal road funds. Each of those has 126,000 left in the local streets and 481 in municipal roads, in spite of spending a lot of money on roads this year out of those 3 funds. So they're all in good shape. Okay. Now we'll talk about what nobody wants to talk about, the net pension liability. So back on page 9, this is again the full accrual basis financials. Sorry to make you page back and forth. So you can see right, the left-hand column, that's the governmental activities, what those first couple of slides were showing some information on, but this is the balance sheet. And right near the middle of the page of the left-hand column, you can see a other post-employment benefit amount and a net pension liability amount of 11 million and 22 million respectively. Those are big liabilities and lead to, right near the bottom of that column, an unrestricted deficit of about 25 million. So not to be alarmed, it's a big number. Most cities in the state are running a deficit now. I was thinking when I was putting this slide together, I should do one that shows all the ones we audit with their negative amounts. That would be interesting for you to see as well. But most of them that we audit do have a deficit fund balance going, or a deficit net position there, as well as you. You are making contributions as required to the plan. In addition to that, you're making extra contributions, and if you flip ahead to page 35, I'll show you what the effect of some of the changes that get made each year have. I'm not an expert actuary by any means, but this is just a big projection. And you can see that chart right on the top of page 35, where you can see the contributions that are made of, gotta find the right number, sorry, 1.7 million in contributions by the employer. However, interest on the outstanding liability and changes in assumptions of 2.1 million, the interest is 3 million, so it's really hard to make up any ground on these pension plans, because right now they're projecting a 7 3/4% increase each year, and that hasn't happened in the market for a lot of years. So, but they're still hanging out at 7 3/4 projected. And part of that change in assumption is the decrease in, they dropped it from 8% down to 7.75%, so.
What do we actually get charged the interest on?
The actuaries chart have an interest charge on the outstanding liability. So your total pension liability, right at the top of that left-hand column, at the top of the page, is 40 million. So they do some calculation to come up with an interest amount charged against that.
But what, for what? We don't owe it. It's a future benefit that you have to pay, so.
Yeah, they're projecting everything to the future, and I'm not an actuary, so.
So we're paying interest on something we don't have.
And then we
You're
don't
being
know.
charged, you're charged interest on the liability, correct? And that drives the liability up. Just like if you had debt outstanding that you didn't pay, you're gonna.
But we don't. We don't owe it to anybody. That's it. I've always been confused by that when I've read these. What are we actually paying interest on when we don't owe the debt to an entity that lent us the money?
This liability is owed to your current and past employees. It's owed to them. And it changes and fluctuates based on these assumptions. But the reality is you're going to pay out a sum of money to your current and past employees. And they're saying that that amount of money right now is $43 million.
Is it also geared towards accounting for inflation?
I still don't get it.
Yeah, that's all calculated and included in there.
It still makes no sense to me that what we're paying interest on. Maybe in the future. So
Well,
we don't have to waste all our time here
When the
today.
MERS guys are here, they're the ones who really need to explain it to you, the actuaries themselves.
Yeah, we had them here a month ago.
Yeah.
Well, as you said, I mean, we have to look to the future. We're going to have additional employees retire, and that's, I get that, but it is a little frustrating. I don't mind paying interest, but.
But it's like, but what are we paying? We've got these people in the future, and that's what our unfunded liability is. As these people retire, we're going to owe them $40 million. But we don't currently borrow that money from an entity like a bank that we have to repay it with interest. It's just a number that represents this future amount that we owe. So what are we paying interest on?
Can I just answer that? Because it's so
Yeah,
simple.
absolutely. If you guys
It is
don't care.
it is a misdefined term. It isn't interest at all. It's the actuarial amount of money with the expectation of inflation and other changes that will be due down the road. The term interest is what's really confusing. It isn't interest in any way, shape, or form. If you have to pay,
Actually just changing their accounting to say it went up.
if you have to pay somebody $10,000 today, and you guarantee that you'll pay the essential same amount with inflation and other things 25 years from now, they will figure out what that amount is. So perhaps it'll be $50,000 down the road.
Okay.
They're calling it interest. It is in no way, shape, or form interest.
So it changes our budget. Nobody's gonna break our kneecaps.
Well,
Right.
but is this $3 million set aside for future pension liability? I mean, it's, all right, it's money we've spent, but do we have it on our books as money that we can spend on a future pension liability, or is it just, I mean, who are we paying the interest to? MERS? I mean, is that just money out of the general fund? I guess that's what I'm a little bit confused on.
When they do their projection, yes. It's all calculated into your monthly payment that you make to MERS.
Okay.
But it's really just affecting that bottom line number.
Mm-hmm.
Then the next 40 years, like you're saying, that if we have to pay someone $10,000 now, 40 years from now, they're going to put this fictitious interest on it, so the number will really be 13,000, 18,000, whatever it happens to be.
Yeah,
I get it now.
But we're not allowed to project our revenues in advance and factor in inflation, increased property values. We're not allowed to do that from an accounting standpoint.
Right now, the way it's set up is that your liability is projected, and they look at your current fair value, what you have in the investment side of things.
And so, can I ask what's our shape in compared to everybody else that you audit?
I should have done the slide, but almost everybody's in a big deficit position. Some are more funded than others. Many communities have eliminated the defined benefit plan and gone to defined contribution or some other hybrid at this point, so that helps settle down or end the contribution requirement. However, I think MERS now allows for 15 years to pay off that liability if you get out of the defined benefit plan. It used to be 5 years. So they really we strung that out a little bit to make it easier, but that's a recent rule change. But most communities, I mean, nobody's 100% funded, I guarantee you that.
Right, but, you know, in recent articles or things I've seen are putting Norton Shores at the bottom of the barrel in Michigan. Is that what you're seeing here?
I didn't compare it to anybody else, but it is larger numbers for sure. And that's just based on the number of employees, the benefits that are given to those employees, you know, over past contracts and that kind of thing. That's what drives that.
And so our steps are sufficient, or?
Well, that's our next subject.
Yeah.
Yeah, that's the
Agenda.
next agenda item.
Right, okay.
I'm just reporting them numbers.
Oh, yeah.
Just the facts.
So that's all I had to go over in the statement. I started with the good stuff instead of the bad stuff first and then going to the good stuff. But overall, the city, I mean, general fund wise is in decent shape, and all the other funds are positives. We've got money set aside for capital project funds for future projects, so you know, good amounts. So, but this thing makes it look ugly. In addition to that, I have a little 2-page letter with just a couple minor little things in it that can be cleaned up, and those are just to help strengthen controls in the city. One is regarding some utility billing, and we went over that with the utility guys and told them exactly what we were talking about and how to do it. And the other was with the OPEB census. We looked at what was sent to the actuary, and some of the information wasn't quite accurate, so those items got corrected. And next year the census should be more
Regarding,
accurate.
and I read that in our
Yes.
packet, is that a significant financial issue?
Well-
That inaccuracy with that data?
That, all that does is drive that liability, the OPEB one, not the pension
Right,
one.
right.
So, you know, if you're looking at some of them had the gender wrong, so if you're looking at male rates instead of female rates, it could affect it. It's not going to have a big impact on it, but it's something that's important to just pay attention to and make sure we have it accurate. And it was an easy fix, so.
Well, thank you. Any further questions on the audit?
I just think compared to budget, the way we originally, I think Mike had projected almost $1 million decrease in that position this year, and we ended up with a $1.4 million increase compared overall budget. So I think, overall, I think we did.
Yeah, if I can add to that, I mean, we ended the year $470,000 under budget, about $230,000 under budget in the general fund, so.
Yeah, ahead of your budget.
Yeah, and I want to thank, you know, the department directors and their staff for watching the budget, monitoring it, and coming under budget.
Yeah, that's some good news. Yeah,
Sure. And steps have been taken to start working away at that pension liability too over the last few years. You know, over $1 million has been put into that in addition to the required contributions. So, and still maintaining a positive bottom line. Okay.
Thank you.
That's it. Thank you.
Thanks.